Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. I'm Garrett Palmer, joined here with Andrew Hall and Ben Nye, and today we're going to discuss Apple and established players that they could acquire because they have quite a bit in cash. As we mentioned in our last video, we just did a video on high growth, so check that out. Ben, lead us into some bigger companies that they could acquire.
Yeah, well, first of all, just stepping back, for those of you who didn't see the first video, we obviously encourage you to go back and watch it, but the second thing
We demand it.
Demand. And it is video on demand, so you're doing well there. $246 billion in cash is what Apple has. They have $87 billion in debt, which makes for $158 billion net cash on the balance sheet. Majority of which is held offshore, $734 billion market cap. So that's kind of what setting the stage for Apple and putting into context some of these huge acquisitions that we're proposing.
Yeah.
And we would be happy to take a percentage consulting fee
Right.
for Apple if they were willing to.
Seems fair.
Yeah, we've done some very extensive analysis here. So established players. Talked about high growth companies last time. We led off with autos. We talked about Uber and Tesla in the high growth. But what about GM? With GM, they're getting tremendous cash flow. They'd be acquiring something at a price earnings ratio that's substantially below theirs. So it's accretive in that respect. It's accretive on the EPS level. You probably wouldn't have to pay that huge of a takeover premium compared to some of the higher growth names. In fact, the acquisition value would probably be similar, maybe even less than if they were to acquire Tesla, and certainly less than if they were to acquire Uber. They'd be getting a great CEO in Mary Barra, who has a 93% rating on Glassdoor. And it would cost about $53 billion. So you're not even going through a third of your net cash.
It's crazy.
So what do you think about that, Andrew?
I mean, I think it's attractive. I mean, I think, when you look at what Apple's trying to do in the car space, especially in the quote-unquote smart car, the iCar. Let's go ahead and call it the iCar. They haven't done it yet, but we will. Anything in the auto space starts to make sense. And I think you start to look at the efficiencies of what a player like GM or even a Ford, but GM in this instance, have in actually manufacturing vehicles and understanding how to do that. That's a decisive advantage and something that should be attractive to anyone looking to get into the smart car space. Because although you are obviously, if you're Apple, looking to put your technology, something that a GM or anybody else wouldn't have, although you're trying to put that into the vehicle, you still need a vehicle to put it into. The synergies that you could obtain by having somebody that just knows how to build cars, knows how to do so in bulk. I mean, I think that's one of the big challenges we're going to see with anybody rolling out, kind of a smart car type model is how quickly can they do this? How quickly can they scale it? We've seen it on the electrical cars with Tesla. The biggest challenge really is the scale, ramping that up, making sure they can, produce at the rate they need to. GM's going to deliver on that front because that's what they do.
Right.
So from that standpoint, I mean, GM's pretty attractive. Now, I mean, obviously you're going to have kind of even just in terms of from the outside looking in, the culture seems like that's going to be a bit of a challenge. You kind of picture the blue collar automaker type mentality from GM versus the tech sweatshirt wearing startup at Apple. That mentality is what you tend to think of. So there's going to be a little bit of I think probably a cultural challenge, but at the same time, it just seems like you could accomplish an awful lot by partnering with somebody up like GM.
Yeah, I totally agree. And also, first tweet from @RealTimCook will be @RealDonaldTrump. We just added tens of thousands of American jobs. So we want,
Big league tweet.
yeah, I mean that would be impressive. Next is kind of a trio of, or let's talk about Nintendo and Sony, two Japanese companies, provide content, provide some intangible assets in terms of their brands and what they add there. With Sony also, you obviously get the television manufacturing as well. Nintendo, Pokemon was a huge hit. If Apple can actually create some of those games and really promote them, um, themselves, then you might start to see that service revenue increase and some revenue synergies there, as well as some cost synergies because they can just redeploy a lot of their Apple developers onto these Nintendo projects.
Yeah, I like the idea of Nintendo a lot. It just sounds fun. One of the things that I thought was a huge miss by Nintendo, the company itself, on Pokemon was really just the amount of licensing out they did on Pokemon Go. By the time it was all said and done, you had the Pokemon company, and then was it Niantic?
Niantic and Google was
Yeah,
involved.
and Google had spun off Niantic or something like that. I can't remember it all. We did a podcast about it. I said it all once. Y'all can go back and listen. But but Nintendo kind of missed the boat on there. So I'd like to think Apple would bring a little bit more savvy in terms of the licensing, so to speak, of some of these great characters from Nintendo games. And that's where I think things could get really interesting when you start to think of all the premium in-app purchases, things like that. You've got the Mario game. I know Sam, who's not with us right now, he's a big fan of the Mario Run game on the iPhone. But you also could, it seems like you could license things into like social media type apps, whether it's a Snapchat filter that all of a sudden is integrating things from augmented reality games on Nintendo. If you're Apple and you have that keyboard setting, so to speak, on your iPhone, and you have access to license that stuff because you own the company, all of a sudden things are really start to kind of go across apps outside of games, get a little bit more interesting. Sony, it's a little bit more businessy. I mean, Nintendo really just sounds fun. I mean, that's it. Just seems like you could have a lot of fun if Apple and Nintendo were one.
And I think a lot of Apple employees would have a lot of fun with it too.
Yeah. Sony, becomes a little bit more of a business decision. I mean, not that Nintendo wouldn't be, but in terms of just kind of understanding what synergies could be achieved there, it'd be interesting because you still have the PlayStation platforms that are, still a force in the gaming space. I don't do video games, so I don't really. So I that's all I know is that they make PlayStation.
You could throw in some Apple TV bundles
Yeah.
with purchasing a TV.
Yeah.
And I mean, with Sony, the problem I see is that it just kind of feeds that Apple is yesterday's company.
Right.
Because they're acquiring the maker of the now defunct iPod is acquiring the maker of the now defunct Walkman.
Yes.
And it's like, so what's next? So they're just going to build TVs together? I mean, why couldn't they do that before?
Right.
I do think that you acquire some movie rights, and I think
That's a great point.
And I think that could be good for a company like Apple, but when you're doing that, you're buying all this other junk, low margin stuff, and then you got to move the company from all that Japanese ownership. I think it just becomes really tough, a lot more difficult than if you acquire Nintendo and now all of a sudden overnight you have rights to these assets.
Yeah.
Panasonic, maker of all things Internet of Things, digital cameras, everything. What do you think about that and integrating that with the Apple business and kind of using that as a way to compete against a Nest? For Google.
It'd be an interesting play because it almost is a hard, I don't know if it's a hard left or a hard right, but it's a hard turn from what Apple has previously done, which has been kind of this isolated ecosystem. We want you to have all of your Apple-related things connected. We want you to have the Apple TV, the Apple Watch, the iPhone, the iPad Mini, the MacBook, all this good stuff. And we want everything to kind of move between those things, and we're going to store it up in the cloud. And that's all we're going to do. But we want you to have everything as interconnected as possible. Immediately, this broadens the realm of things, and they don't have to go outside their way to create an Apple camera or all of these different things that Panasonic already has developed and already has on the market. So it immediately broadens that, but it seems like that would be counter to what Apple wants to do, which is to kind of establish a brand that is both universally accepted and accessible, but also kind of a prestige brand. Yeah, I mean, they like to think that the Apple product, insert name here, is significantly better than anything else out there. They're going to put a price premium. Still want it accessible. They still want everybody in the world to have it and use it and to be a fanatic and to be a cult follower. So, it seems like bringing in something that maybe Apple would call a little bit more generic on the technology side in terms of hardware would be a little bit of a deviation from their brand.
Yeah, I totally agree with that. Because what you have is, even today, the Apple management loves to talk about their gadgets as people. Like the personification
Right.
is phenomenal.
Meet the iPhone.
No, they just say meet iPhone. And iPad sold very well. I mean, they have no definite article at all. I mean, it's just, this is, we all know iPhone. Pleased to meet you, Siri. And with Panasonic, that, the number of SKUs just explodes.
Right.
And how do they continue with that cohesive brand and maintain that? I think that would be a big challenge. Another challenge would be integrating a company like Corning, which is next on our list. Corning obviously makes Gorilla Glass for the iPhone. It makes glass for other applications. They're kind of the leader in glass technology, although they do see price declines every year, and it's relatively low margin business. For being in an oligopoly, that said, Corning does seem to have a bit of a technology advantage there. You'd obviously get some synergies on the side because you're not paying Corning so much, and you can kind of cut out the middleman in some of those aspects. But again, it's similar to Sony, and you're buying yesterday's company, or a company that doesn't have huge growth potential.
Yeah, Corning's one that it'd be a pretty cheap acquisition. It's market cap at $25 billion. They're probably buying this thing around 30, no more than 35, I wouldn't think. It's one of those things that, it makes absolute sense in terms of buying within your own supply chain. So in that regard, it makes sense, and you may also create a little bit more of a barrier to competitors, kind of isolate them out, or at least benefit from their purchases from Corning. So it makes total sense, but it just, Apple sat on all this cash for so long, it seems like. Seems like they're going to make a splash with it, and I don't know that Corning does that.
Right.
Do you know what percentage of Corning's revenue is from Apple?
I don't know.
Because I would imagine it's pretty high. So I was thinking that Apple could already have enough power over them to not really need to acquire them to control that price.
It's a great point. So the biggest product that goes into Apple is Gorilla Glass, and that's in the specialty material segment for Corning. But what you have at Corning is they sell a lot by volume. So what has the biggest volume in like LCD glass? Well, large screen TVs, which is a pretty low margin product. So lower percentage than you would probably think actually goes into Apple. But if Apple did want to go into TVs or lock Samsung out of Gorilla Glass, then that's something they could do. So probably not buying Corning, I think is the conclusion. What about Qualcomm? So again, we're looking at within the supply chain. There's these massive lawsuits going on with Apple and Qualcomm, or at least a massive threat of lawsuits. I'm not sure where we stand in all that. So
Maybe that's the play
thoughts
here,
on
right? Apple's throwing these darts. They're firing these missiles, pulling a North Korea, shooting these things, trying to get Qualcomm a little bit shaky, bring the price down, and then boom, we're buying you. Maybe that's the play here.
Maybe a hostile takeover for Qualcomm. I do think that, once again, you start to get into, Qualcomm doesn't necessarily it has less of a competitive technology advantage than it used to. And I think that's a problem, because if Apple wanted to get that technology edge versus competitors, it should have done that 5 years ago. And now kind of going outside the realm of what we've been talking about already within the kind of Apple ecosystem is Cigna. Cigna is a health insurance company. But just hear me out on this. They could probably acquire Cigna for less than $50 billion, or thereabouts. With Cigna, you're acquiring health insurance. Tim Cook has been huge on wanting to get into healthcare. They have an entire app on the phone, which is just your health data. If they could just aggregate, it's an opt-out program. So you get a new iPhone and it says, do you not want us to track you? And if you have to check that in order to not, otherwise it'll by default track everything that you do, track your movements, evaluate the trajectory of your health. And that feeds into the insurance data, which should allow for a competitive advantage in underwriting. So that's potential. You also have the idea of just aggregating data. Apple still has extremely smart people there who can build software to make things efficient and run systems well. So you also have that at Cigna, which could help on their cost side. What are your thoughts?
I like it, and it's obviously a stretch, but if you kind of work on this theory that, hey, they want to get into the space, this is a way to collect massive amounts of data. The other thing they can do is they have a product, the Apple Watch, that for everyday people, we joked about this, I think, in our previous video. For everyday people, it doesn't necessarily have the functionality that really drives me to it. I mean, I have a Generation 1 iPad. I have a MacBook that still works perfectly fine. It's a couple years old. And I have an iPhone 6. I upgrade my iPhone every time it's available. I have zero interest in the Apple Watch. But what you could do is if you start to compile all this data that's accessed either through the phone or through the watch, start to use it, start to incorporate it into Cigna and their health rates and their corporate health plans, the promotions that they offer. All of a sudden, if Narwhal Capital comes in and says, hey, here's the watch, we're buying it because it's worth us spending $300 because we get a cut, because Cigna will be able to benefit from tracking that amount of data from you, and therefore they relay that cost savings to us, I'd use the thing.
Yeah.
And so that's where all of a sudden you could kind of have almost a subsidized program where all of a sudden a product that maybe kind of has a somewhat niche following could become really incredibly mainstream really quickly, benefit Apple directly, both because you're having people actually buying these things, and benefit Apple because they're creating a smarter and smarter and smarter healthcare platform. So that's where it's like you kind of see this technology plus this idea of accessing as much data as possible working together and really making something pretty powerful.
Yeah, I agree. I think it would be an interesting acquisition. It would be one of the more interesting acquisitions that we certainly talked about in this podcast.
Yeah.
Like that. Yeah. The last one we have is Koenig-Leike Philips, which is Philips PHG stock symbol. They are becoming a health tech company. Again, kind of similar. They're big in the hospitals. It would give Apple an into that. Maybe Apple can enable a lot of the medical records and health data and be able to track that. Any thoughts on there?
So, similar to what we just touched on with Cigna. I mean, again, it gets Apple in front of a space that's, obviously a space that people pay a premium for when we talk about healthcare, and the amount of, the portion of GDP that goes towards healthcare costs is just staggering. So it's a space that I think anybody that has cash should be trying to get into.
Yeah.
So I think that's an attractive, opportunity for them.
So out of these 8, which is your favorite? What would you do if you were Apple?
I think, depending on my level of commitment to the car thing, I think GM would be pretty high up there.
Yeah.
In terms of, I just want to do something just to make a little bit of waves, I think I would put Nintendo in there. It's just you start to look at that amount of cash and what they would actually be spending, and there's probably, very little risk to a Nintendo acquisition, it seems.
Right.
GM moves the needle. I mean, no doubt about it. I mean, and probably depending on what your actual acquisition premium is, you could take a hit on the stock, or you could, get a little bit of a rally because of that. But I think it would show a huge commitment. I do think that's a closing window, though.
Yeah.
When we start to think about smart cars and driverless cars and all that kind of stuff, I mean, that window is rapidly closing, it seems like. So to really take an advantage there, I mean, I think you'd have to move pretty quick.
Right.
What about you, Ben? What do you think?
I think I would go Cigna and Nintendo. I kind of to your point about the closing windows on the cars. I think GM's attractive, but honestly, I think I might buy Uber before I would buy GM. I mean, you're not adding. It sounds crazy to say, but I think that does get people more excited about the company. Kind of similar to when Facebook bought WhatsApp. I mean, it was a terrible acquisition in terms of what the value they were getting.
Right.
But it got people
Moved
more
the
excited.
needle.
Look how many users we now have.
Yeah, and the last thing I would say, we didn't mention any company like this. I think Apple would be really, really smart to acquire some kind of giant in the cybersecurity world.
Yeah.
I just think, you look at the news today about Yahoo actually facing punishment for their breaches. You look at all the cloud hacks and all those things that make headlines constantly. Apple, one, I think it's a great PR move to say, hey, this is how serious we are about cybersecurity. Two, I think it would be really beneficial. And three, it seems like combine that with, hey, we're the biggest, Apple, trust this cybersecurity process and this firm and these products with our database and with our iPhones and with our iPads. This is who we use. All of a sudden, that's a really marketable company because all of a sudden, hey, the best player in the space likes it so much they bought it. Let's go see if we can license it. So that's another thing, and I don't know enough about cybersecurity to be totally honest with you to say who that would be. But I think they should be looking at that.
And once again, that gets you in those with the enterprise customers.
Yeah, absolutely.
I think something like is FireEye still?
Yeah.
And then you got Symantec and.
All right, this has been the Investing Podcast on what Apple should do with their cash. Stay tuned for more content. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.